yada, yada. But I got my mutual funds. I've got separately managed accounts. You can talk to a broker at Euro Pacific Capital, find out, which strategy is right for you. If you live outside the United States, if you're watching, if you're listening to me in another country, the foreign accounts I generally handle through Euro Pacific Asset Management. EPAM, EuroPacificFunds.com is the website. I run that business out of Puerto Rico, and I open up and I manage accounts, separate accounts for non-U.S. citizens through that company. But people need to be moving. There's a lot of opportunity in foreign markets because when the dollar goes down, by definition, some other currencies are going up. As people are fleeing U.S. markets, that money is going somewhere. That's where I am. I'm anticipating where the money is going to be, and I'm there first. I'm waiting for everybody else to figure out what I've known for years. And when they do, it's a big payday for me, I think, and anybody who's been following my advice. Here's a guy calling in, Anders from Norway. What do you think about the Norwegian economy? And, obviously, the mistake that the Norwegians are making, they got this gigantic sovereign wealth fund, and, they should not be building up this sovereign wealth fund. But, they have it. But at least the Norwegian government has a bunch of assets as opposed to the U.S. government that has a bunch of liabilities. But I am bullish on commodities. I'm bullish on oil. There's a lot of oil in Norway. But what I like about what's happening in the Nordic countries, like Norway, like Sweden, everybody likes to hold Norway and Sweden up as examples of how great socialism is. Oh, this is democratic socialism. We should emulate the Nordic countries. Well, you know what? They tried democratic socialism, and it failed miserably, and they know that. And so the pendulum is swinging in the other direction in that area. They are moving from more government to less government. And I think that trend will continue. It's not, always going to be in one fluid motion. Sometimes there's a step back before you take a couple of steps forward. But the Norwegian, the Scandinavian countries, they got rich under capitalism, not socialism. They started squandering their wealth when they were dumb enough to vote in a bunch of socialism. And then they figured out how bad it was, and now they've been moving back in the other direction. So I have money invested in both Norway and Sweden in our funds. So I am actually optimistic on that part of the world, certainly relative to the United States. Looking for some more people to challenge me, some of the deflationists out there. But let me look at a question coming in from John Wycliffe or Wycillus. QE lowers long-term rates with the promise of inflation, but low interest rates traditionally imply the opposite, deflation. How can the Fed explain the contradiction? I'm not really sure what you're getting at there. Low interest rates in a free market, you would think that there would be low interest rates when there wasn't a lot of inflation, right? Because interest rates are basically a compensation for not only the time value of money, because people prefer money today than money in the future. And so that time value is priced through an interest rate. That's why these negative yielding bonds are so crazy. Because it makes no sense. Because you'd rather have money today than money in the future. Yet in Switzerland, 50-year Swiss government bonds have a negative yield. Why would anybody want their Swiss francs more in 50 years than today, right? Someone gives you a choice. I'm going to give you a Swiss franc today, or you can wait 50 years and then I'll give it to you. What idiot's going to pick 50 years? How many people are even going to be alive in 50 years? Even young people have no idea. They can get hit by a truck. They can get cancer. A lot of things could happen in 50 years. Why is a Swiss franc being paid to you 50 years from now more valuable than getting one right now? Yet that's how this crazy market is. So normally, though, when interest rates are low, it's because money is not losing value. Because if I'm going to loan money to somebody and they're going to pay me back in 10 years, I have to worry about the purchasing power of that money 10 years from now. And if I think there's a lot of inflation, I'm going to have to be compensated for that loss with a higher rate of interest. So normally, when you have high inflation, you have higher interest rates. When you have low inflation, you have low interest rates. So why do we have all this money printing, yet interest rates are so low? It's because of expectations. People expect inflation to be low, and so the premium that they're demanding is low. So that's distorting the market. But the other thing that's distorting the market is that so much of the bonds are being bought by governments that just print money. So they don't give a damn, right? The central banks don't give a damn how much they lose. They are buying bonds for a political purpose. They're trying to prop up an economy or an asset bubble, and it's money that they created out of thin air. So what do they give a damn, right? So it's not a real market. The market is being distorted by governments. If no central banks were buying bonds, if it was simply the public that had to buy bonds, interest rates would be sky high right now. People would not be stupid enough to actually take money that they worked hard and earned it and loan it out at a negative rate of interest, or even loan it out at a positive rate that's so low, right? So it's all because the governments are in there distorting the markets that it's all screwed up. But this is going to blow up. This is going to blow up in a spectacular way. And if you think it's going to blow up in a way to make the dollar more valuable, you are nuts, right? If you're in that deflation camp, you are completely nuts, right? To think that all the problems that have been created, when it all comes tumbling down, the one thing that's going to retain value is the paper, the Federal Reserve note that they're cranking off of a printing press? Absolutely not, right? That stuff could become worthless because intrinsically it has no value, right? It's all about confidence. I mean, the value that the dollar has is I need dollars to pay taxes. That's it, right? Because I have to pay taxes in it. But if the dollar is collapsing, well, I don't want them now. I'll just buy them, before tax day. If you're printing them like crazy, I don't need to hoard them. I want to avoid owning them because they're just going to lose value, and that's what's coming. All right, Jackson is writing, will reduced consumption by boomers retiring affect the rate of inflation? No. Remember, inflation is not about people. It's about money. And, Americans are going to spend a lot less. I mean, there's no question about it because prices are going to go up. And when prices go up, people can't afford to buy as much stuff. I mean, Americans are going to get wiped out. Most of the baby boom is going to be broke. They're not going to be consuming much through retirement. Now, a lot of people think, well, if Americans stop buying, won't that mean prices come down? No. Because remember, prices are a function of supply and demand. So if demand goes down, what if supply goes down even faster? That's what's going to happen in America. The supply of goods is going to collapse because the dollar is going to collapse. And so all the imports are going to disappear. So imagine what it would be like shopping in America if there were no imported products. I mean, prices would be sky high because there'd be nothing to buy. But then the cost of producing stuff domestically is going to be very high because inflation is going to drive up the cost of production. And if things cost more to produce, then you produce less stuff. So we're going to have a lot of inflation, and people are going to be buying a lot less, right? They're going to be buying stuff, but they're going to be paying a lot more for the stuff they buy. So they're going to be spending more, but they're going to be consuming less because it's going to be higher prices that they're paying. They're not going to be buying more stuff. They're going to be buying less stuff at much higher prices. I got Maximum Liberty. Okay, that's a good name, Maximum Liberty. Let me see. Must be an Italian, I guess, Maximus. Who should Canadian residents call to get into the mining stocks? Well, my company, Euro Pacific Asset Management, I've been pending for months in Canada. I should be registered in Canada. I do have an interest in a Canadian company, Echelon Wealth Partners. It used to be called Euro Pacific Canada. They renamed it as Echelon, and I am a part owner of that broker-dealer. But I'm also registering Euro Pacific Asset Management in Canada. And so soon I will be able to accept Canadian clients directly from Puerto Rico. And my mutual fund will be available, the Euro Pacific Gold Fund, which is the one fund I've got already that has 5 stars. In fact, I got a plaque from Lipper because my fund was #1 for 5 years and then #1 for 3 years. So that fund will be available to Canadians. Hopefully before the end of the year, you'll be able to buy it in Canada. Right now, you can't. But I'm hoping to start expanding. I got a lot of followers up in Canada, and so I think I could get a lot of business. I just need to, the government requires all sorts of, regulations. I got to get licensed and all this stuff up there. And so I'm going through the process, and it's taken a lot longer than I thought. That's always the case with government and regulations. Steve Fernandez. If the American stock market will crash, what markets should go into, and when should I come back to American markets? I have no idea when we're going to come back into the American markets. I mean, we'll make that decision when it happens. The U.S. market fell dramatically from 1966 to 1982. 16 years, it was down 70, 80% in real terms. But when Ronald Reagan and Paul Volcker came in, the stock market was a great buy. You could have bought the Dow at 700, 800, and look where it is now, right? 27,000. So, I think the U.S. stock market will be a buy at some point in the future. I hope it will. And we'll make that call when it happens. But things are going to be really bad. There'll be blood in the streets. Literally, there'll be blood in the streets. And I'm hoping that we do the right thing. I have to see, light at the end of a tunnel. I mean, we have to have rejected Keynesianism and central banking. We have to really shrink government and unleash the free market. And then I can, get optimistic on U.S. stocks. But for now, I want to understand the way the world is going to change. And you have to understand that Americans